Good morning, France. Right now it's about 6:55 a.m. and there are certain setups that I've been working on, and you know for a long time the issue in the markets has been for you to get into a position, particularly on futures and options, and how do you make it immediately work in your favor. So, particularly on the indices where I am very interested in, although can be used in other areas also. So, let me describe all the setups. Now, it's very difficult to give examples on all 4 or 5 setups, but still, I'll try my best to explain the several concepts where the odds are in your favor. So let's go to the whiteboard. Okay, now we are here at the whiteboard. The first setup that I want, first you have to develop a context of the market. Either it's a ranging context or it's a trending context. So first, if we are able to conclude that we are in a ranging context, one of the best setups in an overall uptrend is the W. Similarly, in a ranging context, one of the best setups is an M. Okay, these setups, they generally tend to work immediately. In a trending context, what happens is that the markets, they open and all of a sudden you have an intraday collapse which almost goes below the pivot, and the market immediately recovers. This we have seen several times. So this is another uh, setup which I would categorize as 5-star along with W and M pattern. Now the difference between a 5-star and a 3-star is 5-star you do 100% of your intended volume. 3-star you do 50% of your intended volume. Okay, so these are two setups. Then the other setup is that you are in a range and the market gaps up, consolidates, and starts to break out. So there will be a period where you have these sort of intraday reversals from previous day high, and at some point the markets will decide to break out. Okay, the fourth setup is that you are in an uptrend. The market has a collapse the previous day, makes a low, and closes off the low. On the subsequent day, the market again gaps down, holds yesterday's low, and then immediately recovers back. In my opinion, if you are in an uptrend, all setups where the markets go down first should be rated as 5-star setups. So in an uptrend, this is 5-star, but this is 3-star. Why? Because you are in an uptrend. In an uptrend, this is 5-star. This I would say is 3-star because you are buying after a breakout. Although it does work very well a lot of times. This is 5-star again. Okay. So the idea is that you have 1, 2, 3, 4, 5 setups which are there for an uh, for an index strategy. Now let's discuss one more. Say you have an index or a stock which is showing you multiple highs around the same level. Then you go up and you start to range here and then you break out. Again, similar to the ranging pattern like this one, but here what you are getting is a very clear idea of when you are likely to get follow through. All of these things are equally valid on the downside. Now let's just check out some of the examples. Okay. Now here you can see this is the Bank Nifty 5-minute. 1 high, 2 high, 3 high, kind of an M pattern, but instead of a double top, you have a triple top. And finally, it comes down. Okay. Similarly, on the Nifty, you have a range. The market has some build up here, breaks out, and this is how this setup works. Okay. If we go back, you will see that in an uptrend, all of a sudden, you have this kind of collapse and the market goes up. So generally, if you have a gap up, you do not chase it other than in one condition where the market is already consolidated and is moving up. In all other cases, you must buy an intraday decline. This 200 on the 5 minute is a nice kind of benchmark where most of these intraday declines they end. Now you see here, this is your W pattern and how well this has worked. So these are, you see, setups which keep on happening on a daily basis. And if you train your eye enough, I think you will keep finding them, and they are very, very useful for futures trading. What is the principle? Basically, 5-star setup means I want to buy and the price comes towards me. 3-star setup is anything which is gapping up and I am doing it with half my volume. This is again the plunge that we had spoken of. See, this is the kind of plunge you want to buy in an uptrend. You don't want to buy here. You want to buy here. So if you wait enough, you will see exactly the kind of zone you want to enter into. And if that setup on a particular day does not happen, that is fine, because it it will happen on the next day. Again, one low, second low, third low. So this is your triple bottom which is happening here. So if you wait enough, you will get those high probability setups. Again, on the other side, you have one M, second top, and the market stump comes collapsing down. The problem is if you are too early. Again, you can see some kind of an M pattern which is forming. So all kinds of patterns are really available. Some are reversal, others are, buy on dip. Still others are breakout patterns. Each time the market gaps up, your first instinct should not be to buy, it should be to look for this kind of a collapse. So these are the kind of patterns where basically you can get immediate movement on the upside, and these can be traded using futures. A lot of people have started trade options because they are scared of sharp moves against them. The reason for that is that they don't have good setups to work with. See, this is the collapse you want to buy. Okay, again, this is some kind of an M pattern post a gap up. Now, M and W will only be formed if you have a gap up or a gap down. So There has to be something to reverse. I think that should be it. Need to get ready for the markets. I hope this will give you some context in both individual stocks and the indices. That should be it. Take care, trade well. Please consult your financial advisor. Always use stocks and back test all of these patterns.